Good morning, everybody. All right, let's let some people jump in. Okay. What's up, guys? How's it going? Pretty wild move. Let the community know I'm up, live and running. Okay. How's it going, guys? There we go. Yeah, I was just saying that it's a pretty wild move last night. Of course, it's while we're sleeping, like 3 o'clock in the morning, it decides to break out. Pretty wild. Good morning, Aaron. How you doing, man? Oscar, how you doing, man? Matthew. I don't even try saying that. Pierre, how you doing? Market is stagnant for the past few hours. Yeah. Well, it just ran up, took a sprint, so it's kind of tired. Basically, just did the equivalent of running up the CN Tower stairs nonstop, and then now it's taking a rest. Needs to get doesn't need it, but we definitely would want something like that for sure. Yeah. So we can go over like yesterday's trade, and then we can go over like what we could prepare for today. Does look like it's, we just generate a 30-minute and 5-minute order block up here. We're consolidating, trying to create a reset. We're at the local support now, but if we lose this, we could pretty much undo our gains back down to this local high. We have confluence here of this previous high and the VWAP being along a line here. So if we do fall down, I don't think we're going to fall all the way back down just because of that confluence, but we'll see what happens. If we get that break of structure continuation, then we'll just delete all the gains right away. And it's like a front run so far to where we thought it would have a full-on reversal. So I got a feeling that we're going to have a continuation before we go. And then, well, yeah, come back up there. Sometimes the best moves happen overnight. Yeah. Right. But we had a lot of fun with this range a bit. Well, some of us did. It was a lot of, like, there's some moves that were just like, you knew they were going to happen. Like this move here up, we knew it was going to go up the other day when we were doing the trade hunting. And I didn't jump in on it because it didn't meet my rules, but other people jumped in on it anyways. Same with this short. Didn't meet my rules. Didn't give me a change character occurrence that I wanted. And yeah, then it comes down. I had a few scalps like here and there, but last night, yesterday's trade from the live that we took played out really well. We hit pretty much exactly where we were targeting with the previous point of control. I was hopeful that we'd go lower past this, but the buy wall that we had here was just ridiculous, and it kept the price up. So we ended up breaking this pennant posture here to the upside, right? While most of us were asleep. In regards to anyone who took this, if you are watching this now, you should probably get some rest. That's pretty wild. But yeah, and it just scooped up the local liquidity and see if we'll close back inside the range. Wild. But yeah, what we were kind of hoping for before we knew it was kind of likely to go up, right? Um, there's that off chance that we could have lost the 50-day EMA and had it act as resistance and come down to here. But overall, we were just hopeful for that bounce. Now, I'm not sure how far this will lead us. I don't think it will lead us very far because the daily posture is technically bearish. Um, but yeah, we kind of stacked a lot of liquidity along the upside here, and yeah, we did stack quite a bit down below us too. But there's more weighted liquidity above us than there was below us, and we ended up grabbing it all. And we had this supply concern up here that we were preparing for um, potential opposing change of character that could cause the price to actually come right back down to where we started. We're not there just yet. We pretty much teleported from here to here, so it would make sense for it to go range bound a bit and just relax before continuing. But we know Bitcoin, sometimes it just does what it wants. Um, yeah. Okay. And with the price action during the breakout, and like start as like a little battle here against the POC and the downtrending momentum. And then we got our break. Like choosing that as like a breakout trader, would you want to take that? You'd probably want the pullback, right? So it could have been a big player that just bought up and didn't give a crap about how it impact the price, right? But yeah, I think overall we're still likely going to continue to go up and mitigate the supply over here. We also have an area up here that we like to have that grab too, but nothing has to happen. So if we get our confirmation that we're going down first, which would be it's basically like a loss of this support level, and potentially retest and then a break below the VWAP in confluence with that retest and break to the downside there. I would, if you're going to be jumping on shorts, I'd really, really prefer that the majority of you, like depending on your rules, of course, but unless we have a lot of deviation away from the VWAP, it's best to wait for the VWAP to be broken. Otherwise, you're gonna have to you'll have to babysit your trade as we get to the VWAP if you shorted too soon. But yeah, that is Bitcoin. Psychopath, just sprinting while everyone's asleep. Let's see, we got request story thrown at us. Let's see, we got AJ. How you doing, man? Yeah, you weren't all sleeping. Yeah, sometimes the best move happens overnight. Hey, Freeburger, how you doing, man? HRJ, Noah, what's up? Woo woo, how you doing, man? Yeah, yeah. I guess big squeeze coming. Yeah, I see what you're talking about. If we zoom out, yeah, I know what you're talking about. Yeah, we got potential squeeze happening. We have an undercut here, which could, if we get a rejection around here, could generate like a downtrending momentum line here for evolving resistance. Let's see what happens there. But yeah, we're getting kind of squeezed. We still have we haven't invalidated anything when it comes to coming to the downside, because unfortunately that's determined by the daily structure right now. In order to invalidate this drop that was likely going to occur eventually, we have to get the higher high on the daily. And what would that look like on the daily? It'll look as if we had a retest and then create that higher high to confirm that we're leaving this macro valley area. So whenever you're trading valley area value area concepts, when you're trying to determine a trend-based move within the range, when you see the value area high have a breakout, retest to the value area high, and then a higher high, that's a warning sign that we could leave that value area and move on to the next one. So you would look for additional confluences that could invalidate that idea, where that break of structure could define the exit, like a high liquidity zone. You watch those. You'd watch previous supply or previous demand areas that could invalidate that continuation. Stuff like that. Any barrier, really. And looking this on the hourly, you can see it's just a big doji battle. Pretty crazy. But yeah, so from our positioning, like I said before, it's just a matter of, do we see us break this VWAP and validate a downtrend back to the value area high, where we'll likely build a new value area above it? Or do we, we could hold this as support, this previous high alongside with the VWAP, and get a continuation up and prepare for, I'll be preparing for rejections around here for sure. But if we get that continuation in its zone, then this is our next area of interest. This previous high at like 109,000 basically, where we had that pretty incredible SFP that could have helped you get into this short. Okay, so discuss how you draw buy and sell confluence zones. I can't find a lesson where you discuss this. I don't technically have a lesson on that. So it's about like a combination of all the lessons in a sense, where you look at areas of a high amounts of confluence, but you zone in your interest at value area highs and value area lows. So here would be like the value area high zone of interest. Here would be the value area low zone of interest. So you have one confluence already, right? So what you could do is you draw your box like this at your value area high. And like that alone would just be considered one form of confluence, right? So we know at the value area high, we prepare for shorts. And here, another zone of just one form of confluence. Because we know at the value area low, we prepare for longs, right? Since back. Now it's about, after this, it's about refining this box. How could I make this smaller to make my attention like better about what I'm looking for in a trade? So like, let's say, like for example, what we were looking at the other day, we had our zone much smaller like this. Because back here, we were watching based on like this supply concern. And it helps to like start your box of confluence based on like what you used to kind of like niche down the zone, make it smaller. So like over here, we saw like the supply risk liquidity zone. And you'd mark this as an area of interest for your next like short. And if it's not fully mitigated, like sometimes it's helpful just to keep it on there. So yeah, that's just one way of doing it. You can also use like Fibonacci, stuff like that. Whatever kind of makes your box or your zone smaller. Like kind of like what we did over here. Like we had our Fibonacci zone. This is an hourly supply risk from here to here. If you look at the hourly, it's a little bit more transparent, right? This zone here of interest. If we want to like try to niche it down based on the fibs, like all we really have for the low side is this, to make it kind of like refine it a little bit more. Sometimes it's better to just be a little over prepared though, but if you want to make sure you're getting all that confluence in one spot, you just like fit it to that kind of thing. So that's basically how I make my zones of confluence, man. So it's about stacking as many confluences as you can in your zone without making the zone so ridiculously large that it's useless, right? So if you, let's say like we look at this zone now down here, we could look at this as an area of interest for potential longs right here. We've got the value area low. We get the previous point of control, and we've included these wicks down below here where liquidity could rest for SFPs. So we niche down the long box zone a bit. That makes sense. It's just about stacking as many confluences as you can in there. And if you don't remember what they are, it's good to just type in your rectangle, like, what are the confluences that you see? Like, it's a previous POC plus value area low plus high liquidity. Maybe it's an order block as well in there. You type in order block, right? Or 618 or 786 level. And then you could have a reminder whenever you get to your zone that those confluences reside within that box. So that's pretty much it, man. I hope that helps you out. Okay, so let's start taking requests on assets you guys might want to look at. I have until I have a coaching call at 11 a.m. So I have to jump off at that point. Basically, that's all. So I can take on requests until then. So we have about an hour and 10 minutes or so. Oh, we're coming down to the VWAP now already. It's ridiculous. What do we have? A local fixed range. This thing's young. Yeah. All right, we're losing the VWAP. Let's see what happens. This candle needs to close above the VWAP, or else we could start downtrending right back down to where we were. Like I said before, the confluence here is not too strong. We got the previous high and the VWAP. That's about it. That's not even enough for me to take a long, really. And we're losing it. Yeah. So from here, we're likely going to come back down to the value area high. Just like press the undo button, right? Someone press the undo button on the market. We might find news about like some institution buying during something like that. But it was like 3 o'clock in the morning. 3 a.m. is roughly where it started. Didn't last very long. 3 a.m. to 4 a.m. It's just an hour-long crazy pump. Okay, so first request was Teo from Madhushkesh. Sorry if I butchered that. Let's take a look. We have a Teo chart. Let's see. We haven't looked at it since June 12th. Okay. And last time we looked at it was over here. We had this like opportunity here. But now, yeah. This was our last opportunity that we were looking at. Potential double bottom, but coming into a supply concern. But nothing really that safe. Hit the supply concern, immediately start coming down from there. Where we are now. Let that render, I guess. Okay. So Teo moved relative to alongside Bitcoin, but it did it within its own value area. So see, when we have this downtrending momentum here, break, we bounced off the value area low. After, did we grab that? We did. We scooped up this liquidity. So there's a lot of confluence for Teo to run up alongside Bitcoin. Grabbing this liquidity off this like demand zone here. We got very low acceptance. We break, then we broke, get the change of character reaction here, awkward spot. And then we came up and hit the value area high. So if it's going to correct alongside Bitcoin as well, if Bitcoin makes its way all the way down here, that's going to try to close back above the VWAP. It's stupid. Yeah, if it manages to get this way back down here, then Teo is going to follow along it as well. We got the point of control in our face along the way down and the value area low. But if Bitcoin manages to continue now that's trying to reclaim this VWAP, then Teo, your area of interest that you got to watch out for, it's like based on Bitcoin's movement and the positioning of Teo and how fast it was moving alongside it, I'd say that it won't go very far. I could see it getting to this previous point of control here alongside with the supply risk up here. Well, mostly the supply risk is up here. It's been basically fully mitigated, but this is still a zone of interest where liquidity basically ends at the local structure. So I'll be treating this whole zone as an area of interest for potential shorts. Send it back and template. All right, so from here, the confluence would be the previous point of control. We have the end of the local liquidity, and we have a deviation of the value area high. If we can hit our heads off this, have it act as resistance, or it can be done internally within the zone. I think most likely because this is a POC that we're just going to hit our heads off of it. But the bullish case scenario, we are building a double bottom posture. And if we see that as a warning sign of accumulation, and we end up seeing a break of structure for continuation instead of a change of character, then we could run up to hit this measurable target. And the measurable base target for this move, I'm assuming it's going to need relative strength to do this, like basically move while Bitcoin's not kind of thing. So from here to here, we could grab this local liquidity, then come right back down. But that is the measurable base target. I'll leave that on the chart in case you need it, like where the target, and this would be your next area of interest. If we manage to get past this one with a break of structure. Here's the link for Teo in the description there, or in the comments, sorry, if you need it. What's the next request? We did Teo. Next request was Sui from Ek. So let's see, we've got a Sui chart. Same kind of vibes as Teo in that sense, where it's more of a local internal range move, whereas Bitcoin was leaving its range, right? So I bet Bitcoin dominance probably went up. Yeah, it's gone up, not by about 0.24%. Okay, it is getting its butt kicked against this POC. Like I remember I was talking about it yesterday. Or was this zone here, right? Was that yesterday? Oh, that was 2 days ago, that area of interest that we marked. Okay, I remember yesterday. So yeah, so we had this zone of interest initially a couple days ago. We were going to be marking it for our potential long base move. We got acceptance into the value area. That's one barrier. The next big key barrier was here, the previous point of control. We hit our head off of it. But ultimately, you would want to try to target the value area high once you get acceptance, right? But we fell back, lost momentum, started using the value area low as resistance. And then this is where we continued off yesterday, where we were talking about like how the potential of how this trade can get ruined or how it could succeed for us to like get a break of this local support or resistance here, acceptance back inside this value area again. And then we can start targeting the value area high again and try again. But we got punished 2 more times trying to break through that. And we just recently, when Bitcoin had its run up and we broke this downtrending momentum on SUI, we hit the value area high from there. And now we got that same kind of like sluggish, awkward posture, and it's also trying to fight its local VWAP as well. If we get below this VWAP, then we'll be likely coming back down here again, maybe even creating new lows. Let's see. Other than that, we still haven't came up here. Grab that. I would be marking this area here as its own value area now. So just so you can see how it's going to behave based on the local value area data. So yeah, down here, we'll prepare for potential short-term longs. But if we get that continuation down, then our next area of interest is this downtrending momentum on SUI. Like it does look like it's trying to slow crawl its way out of this massive like descending falling wedge. Right? It's getting squeezed. So if it does manage to get us that break of this key area here, then we can get that potential run all the way up to this downtrending momentum here. And we have a big supply concern if that were to happen, like along the way at $3.13 basically. So the same way we box like this supply risk here that kind of helped find this potential range, you'd want to do it for here too. There we go. Okay. See what Bitcoin's doing. Still holding that VWAP. Being awkward. Here's the SUI chart. If you guys like it, put it in the comments. Aaron took along on fun. Okay. My kids do every single day, man. They're never short on fun. Sorry, dad joke. At least you guys can't I can't hear you guys talking or anything like that, so I can't hear the crickets from my terrible jokes. So let's get fun out. Let's see what it looks like here. Fun fair. So we'll go look at it on Binance. Oh, cool. Look at that. Got some relative strength. Brand new EMAs crossing. We had a death cross the other day, and now it's trying to invalidate it quickly with the golden cross, which isn't very, it's probably a lot more, it's definitely more common on alts than it is on Bitcoin. I think it's only ever happened to Bitcoin like twice in its history where it did this little fake out cross. We got that break here on the daily, double bottom breakout. We broke our downtrending momentum here. Right? Let's see. We just mitigated a daily order block right here. It's an awkward order block. It's defined by these two candles here, but is pulled by this upper wick to lower body wick here. Okay, we mitigate that pretty much the full order block there, but we still have liquidity that's resting up here that could also induce a reversal when we get up there. So just be mindful of that. It's good to mark your high zone wicks for a couple of reasons. One reason, if you're an SFP trader, it's extremely helpful to have a trend line that you can identify immediately and know what it means, right? Like for example, with my charts, if you see an orange dotted line like this, you know that it's being tracked for a potential SFP. Or if you see like an orange solid line like this, is a key level that I want to have broken to induce a high volume move. And it's just a matter of like, where's that key level at? Is it at a value area low or is it at a value area high? And then you can potentially take action on it if you're seeing it on my charts. Just make sure you do your own due diligence, of course, with your own rules. Okay, so zooming in on the lower time frames, we had that pretty transparent, supply risk mitigated. Busted right through that too. This was the one that defined the range. But like similar to Bitcoin, it's got that fast move up. It has less barriers than Bitcoin though when it comes to its run up. So let's see if it has some relative strength and brings it up a little further. But yeah, this is where I would be preparing for it definitely to slow down if we get continuations from here above these 2 wicks. There's liquidity that's likely resting there. You could check the heat map for tail. And if there's liquidity resting there, then you got to prepare for it to be used as exit liquidity for anyone who may have jumped in down here. And based on this pump, it looks like there's a lot of slippage. So someone just aped in. And if we get that higher high on the hourly, then this becomes a key level that, if broken, becomes bearish. We have this demand zone right here. So whenever you see weakness, whenever you have a demand zone, like I know I say this a lot, but I just like to drill it into people's heads. Whenever you see weakness and there's a demand zone right below your feet, so you get that divergence, get the change of character, you'd immediately start targeting at least the upper side of this demand zone. And from here, we had that bounce. Now we're coming up to the potential either top of a new range coming up soon, right? Or we can get that higher high for confirmation of continuation here and start targeting this liquidity. But yeah, it's a super like a lot of people like use it as a form of rule of trading, where if you ever see that like an impulse move, a base impulse move, and your very first sign of weakness, you don't have to like assume it, but that's like a really good measurable based targeting for your short. You just look for the next area of strength. Most ranges start this way. Same thing with the opposite's true too. Like if we come down, base, another impulse move, and we get that opposing change character, you'd assume that this would likely be, that this would be the top of the potential range. And if I look left here, it's like here. This one's not picture perfect, but man, fast move down, base, another fast move down. So because of like its posture, you'd mark this as a giant box like this, or you could just do this if you wanted to, but I'd prefer if you took the whole hot area here. And this would help you define the top of a potential range if we had an opposing change of character. All right, well, that's fun. No pun intended. Let's go back to Bitcoin. Are we losing that VWAP? Because depending on the structure, I know like this is going to feel opposite to a lot of people, but if you are looking at a value area low, that's typically where you prepare for longs, right? But you can also prepare for longs at a value area high if the conditions are right. especially if you are returning back to a value area and you have like that opposing change of character. You can use previous value area highs as a form of support for potential longs. Likely, depending on the distance away from the previous high, it might be most of the time it's short term. But the moment you get acceptance back inside the value area, you got to be on bear mode again because we'll likely fall back down to the previous value area low. So we went through Teo, we went through Sui, went through Fun. Lou wants to look at SPX. Hi, Kyle. How would you find Solana bottom before the next bull run? I would like to do a long position for the entire run, but I'm not sure how to find it. So you would need to find a position of strength that was strong enough that if broken, we wouldn't return back to it. And we could find out and see if that's possible with Solana based on its current conditioning. But that kind of stuff happens like based on like macro structure. You want to be looking at structure that's super old. Not when I say super old, I mean like at least a month old. I can go through that during this. I'm just going to go through SPX really quick in TIA, and then I'll answer that question for you. So SPX for Lou, he won one of our recent trading tournaments. We've got one ending soon today. Well, not today, in about 4 days. $10,000 prize. So we got SPX. Oh, we have a chart for that. Okay, cool. Last time we looked at it was on the 13th. A little while ago. Okay. Yeah, we were looking at this last time. I got my TD sequential in my chart, so I'll get rid of that for you guys. So here we were looking at either like a break of this neckline alongside with the break of momentum and the uptrending momentum here. It did a good run up to the previous value area high. Depending on your stop loss, no matter where you put your stop loss, whether it be here or here, you would have been fine after this pullback. Emotionally, probably not very fine, but it still did pretty well. And there's also the potential for an SFP down here that we did not get. We had like a local SFP where we scooped up this liquidity here, but we didn't grab the low, which a lot of people would prefer when you're trading SFPs. We just grabbed liquidity from like this previous wick here, but everyone would prefer that when trading SFPs. But either way, did pretty darn well. I'll delete that noise. Let's see what we have going on now. We lost the momentum, right? So when we were talking about it earlier, I remember us talking about like losing this momentum, let's bring us to the following one, right? We got there. Now we're using it as resistance, unfortunately. And we got some relative weakness on SPX. As like Bitcoin's trying to get new highs. And when Bitcoin is falling, SPX is falling hard. But when Bitcoin's rising, it's rising weak, right? So that's a sign of relative weakness. When you're trying to pick your assets, that's usually a way of saying, like, I should avoid this one for a little bit. And it's likely just because SPX has just been in a nonstop tear for like weeks now. Like it's been from its low to its high. Like it just did 600%. And from its escape from consolidation from this valley area, it's been maintaining this pace of momentum for 45 days. This thing needs a break. So we are still technically building a bullish posture, even though it's falling. Let's see if it holds. But on like the 4-hour chart, we have this pennant that if we were to maintain this, we got to check the order books to see if there's buyers, but see if there's buyers along here that'll keep this up. The measurable base target, if this were to break to the upside, right now the key level on the 4-hour chart's up here at 136. If 136 were to break, we're likely going to come up to here, with this being our primary barrier along the way up. So you can mark that as a 4-hour level. And if we zoom in though, let's see if it's gonna. Yeah, right now it's free falling. So we'll see if we maintain this support. If we lose it, mitigate this. We got this zone. Our strongest area of interest is right here. We should mark this box here along the way. See if this holds us up. Grab this valley area. Here to here. Refine it to the valley area high. POC. All right, and send this to back. Okay, so if SPX does lose this area, we'll likely get a bounce around here. We have the previous valley area high. We have this demand zone here. If we come up, bounce off this, we could hit our head off this momentum and then come back down. If we get acceptance into this valley area, we'll fall down to 107. We maintain support here. We could return back up to the previous valley areas up here. But yeah, right now it's looking pretty darn weak. So hopefully it will hold off this zone in confluence with the downtrending momentum. But right now we don't have any structure to define along yet. So what you want to look for around here is just like a double bottom posture. Hopefully it goes range bound a bit first to reset a little bit. But yeah, get that double bottom posture, we could potentially get a return back up, or inverse head and shoulders, any kind of confirmation of a return back up. We would need to have some pullbacks to help define potential changes of character for our way back up. It's pretty too young to tell, but yeah, these are the only confluences that we have to keep it up, right? Momentum, demand zone, previous valley area high. Okay, Solana, next request. Oh, we had two TIA right after. Let's see, we have a TIA chart, right? Yeah. Last time I looked at it was May 20th. This thing's been on a never-ending drop, eh? I think in general, let's look at the daily. Yeah, it's a price discovery. It's crazy. It looks like there's a lot of like failure to confirm breaks. Other than that last one was a good one. Failure to confirm this break. Do we get that SFP? We did get a little SFP here. Didn't run up for very long though. Ended up basically validating. Yeah, our last little trade was the 20th. What day was this? I think we were talking about it being the 20th. Yeah, right. Oh, this was like the 6th. Yeah, break of downtrending momentum out of our area low, change of character response, ran up, right? Anyone who's learning my rules, that's literally what I look for every single time. Break of downtrending momentum, change of character out of value area low, target the value area high. Watch your head around the POC. We can delete that. Go to 4 hours, draw our downtrending momentum that we've got here. This thing's just been a nonstop drop. So now we got no previous value areas to help support any confluences, right? So now we have psychological levels at these levels. TradingView has them built in for you. Most people don't notice them. It's these straight lines right here. Right? These are all marked off of psychological levels, every single one of them. So you can technically use them as confluence, but I don't. Zooming in, let's first mark our two local. We've got the one here, and we got our one right here. Let's zoom in, just make sure they're marked properly. Yep. A little bit no. And okay. So we have a local supply concern here that helped define this range. We've got a recent double bottom after break of downtrending momentum here. So we could try our way to the value area high. If it has relative, if it moves alongside Bitcoin, then if Bitcoin falls from here, now that it just lost the VWAP, then TIA might fall along with it, unless it manages to have relative strength, which based on this chart, it doesn't look like it has relative strength. Send to back. If it manages to get a higher high, up here, I'll be preparing for potential shorts on TIA. So at 168.4 up until this previous high here. Let's get my box zone right here. Okay, and send it back, and let's get the template. And down here, we got good confluence for longs. Got the order block, liquidity, value area low. But yeah, right now it's in like no trade zone. You don't want to be trading near POC when the price action's this ugly. We could break the neckline here to define a short, but by then you want to make sure that you have the VWAP caught up to the neckline so you have that confluence of the break so the VWAP doesn't cause a problem if it were to confirm that it breaks to the downside. If it breaks to the upside, I wouldn't even touch it. I wouldn't be trading it. I'd just be waiting for a potential exit if I was in an existing long, or I'll be looking for a potential reversal for a short. But yeah, that's TMN. If you're a holder of this thing, that unless you bought recently, you'd really want to have this neckline broken and have a break of structure for continuation to help bring us back to this value area, and then be hopeful for continuations from there. Maybe build like an large inverse head and shoulders to break this downtrending momentum here. So that's what I'll be hopeful for anyone who's a holder of this thing. And hopefully that you're not. It's just getting slaughtered. Let's see. What is that fat yellow line? Oh, if you ever see like a big yellow line on my chart like this, it usually means that it's a key area of interest with a large amount of liquidity. And if price action's crossed it already, then it's mitigated, and I just need to delete it off my chart. Yeah, everyone's. So we're going to SUI. That's where I had that line, right? So I'll pull it up on SUI really quick. It's either A, a high liquidity zone, or B, a sell wall. Yeah, it looks like it was like a high liquidity zone. Plus, it's a big key area of interest. All right, we're losing the VWAP for sure. Oh, cool. Someone reposted the stream on Twitter. I didn't know it showed me that. It's my brother Alex. What's up, man? Caliphate shorted Bitcoin Cash today. Oh, it's refreshing hearing someone talk about Bitcoin Cash. BCH. I haven't looked at it since July 2024. That's crazy. That's nuts. I have like my own little chart color for it. So you said you shorted Bitcoin Cash yesterday. Okay. Well, it looks like it's doing really well, depending on like when yesterday started for you, I guess. But like up here, I could see reasoning to short. We got the change of character here on the 15-minute when that broke. We've got a sweep of liquidity up here. Wasn't a very clean candle, but yeah, swept liquidity from this high. The reason for some people to jump a short off that. I'd rather have the candle close a little bit lower for it to be defined as like a safe SFP. But like, congrats if you took that, because that's like the absolute best position you could have gotten in this. Yeah, lots of reasons to short. Right now, like I said before, when we have this move, you know, impulse move, base, another impulse move, create a demand zone. So here is your little area of concern that we need to break through on your short there, Caliphate. Send it back. So confluence here, you need to have structural confluence now, right? And if you get it through, let's say, an opposing change of character right here, oh, we won't get the change of character yet. We need a lower low first. If we get that lower low, then this is going to be your key area of interest that you're going to want to make sure it doesn't get broken if you're in a short. Because now we're in a spot where ranges are usually born, right? This is where ranges are usually born. So we got to be careful. And it's because if we break that, we'll likely start coming back up here. We can already start pulling a fixed range here, right? Technically, if you are more advanced with fixed ranges, you could pull it from your demand zone to the area where you start to where things start to confirm bearish, like your change of character. So at this point, you could start pulling it, but it's young and unreliable. But it doesn't mean you can't like look at the data to help you with any current conditions that are going on with the chart. And once we get this opposing change of character here, your second one, the range becomes much more reliable. So we need to have this break for acceptance in this value area, and we'd start targeting the value area high while being very mindful of the point of control. Despite this being relatively young, this point of control actually looks pretty strong. So take the POC seriously. Downtrending momentum. But congrats on your short. It's doing really well so far. But what I really would hope for you is a continuation by losing this demand zone for the break of structure for a continuation. And like based on the posture, just like Bitcoin, it could free fall back down to previous levels of interest. We have the confluence of this previous high as well, helping this demand zone up, which is likely why we consolidated here to begin with. Sellers from these trapped buyers and buyers maintain the price to generate an area of demand like this. But yeah, that is Bitcoin Cash. Good job. Let's go back to Bitcoin. Losing the VWAP. Good morning, TradeFly. How you doing, man? Yeah, TradeFly is a good trader too, guys. He's got his own YouTube channel if you want to check him out later. He also does signals inside of InvestiShare and the quantum. Let's see. Okay, let's try to go through FXC's question. I can give you good examples through Bitcoin and how you could prepare for that, but let's see if we can find one through Solana, June 19th. Looked at this yesterday. I got about 30 minutes left, guys, and then I got to do a coaching call. So we've got, yeah, we're hopeful for an SFP here. We didn't get it. But yeah, how you prepare for a macro position is about trying to, it's going to require quite a bit of trades to get it right. Doesn't mean they're going to be losing trades, but it does mean that you might have to be pretty active. Because if you're trying to catch a low before a big run, a big bull run, what you do is you can do like range bound trading, for example, right? We're trading inside of a range like this, and your goal is to try to catch every long at the bottom of that range as possible, especially if that range is coming alongside an apex point, right? So if you see a squeeze between support and resistance, which is insanely common before leaving a value area, or maybe it is not a squeeze, maybe it is a form of exhaustion where within the range or within the value area we're uptrending like this, right? We could fall down or downtrending like this. Either way, you would have some form of pattern-based conditioning from the order books, creating a squeeze or a channel. And your goal is to try to catch the longs at the bottom of your value area after all of your rules are met. Every single time all your rules are met at the bottom of the value area, you try to take the trade. So that one of those trades could lead to a continuation if you don't have. So this does require to make sure you have like a type of exit rule that would tell you could stay in your trade if your target was hit and you were trying to find reason to stay in it. So a good rule of thumb, like some people will do, is they'll have a opposing change of character as an exit condition, especially if we have an apex point, right? So if we broke the apex point after just recently jumping in after all your rules were met, telling us that we could have a continuation, and we leave the value area with a break of structure, then you could stay in your trade. And every time we get into a new value area and acceptance to a value area, it'll help you stay in your trade because you can start targeting the opposite side of that value area. And until eventually you have, big fat warning sign like a Batman looking at you like this, telling you to get out. And that's what I mean. It could take quite a bit of trades. You got to be able to know when to listen to the market to tell you it's time to get out, so you can capture those gains and not be married to the trade when you're trying to capture a bull run, right? Now, when it comes to altcoins, it's a lot trickier, but with Bitcoin, it's insanely easy to do this because you could use if Bitcoin has more tools than altcoins do, right? You could use on-chain analytics in combination with your TA to tell you that the macro bottom is in, right? Like down here. And that will help you have a peace of mind of knowing like you can hold this trade until we're in the overheated zone, right? And but this bull market, ever since we've called it down here, has been dragging its feet for so long with all these ranges. But that gives people opportunities to participate in trying to get in at the bottom of those crazy ranges, right? So Solana is going to be a little bit trickier. You're going to be trying to capture longs at the bottom of your local ranges and hope for continuations. I hope that helps you answer your question. I know it's not like a straightforward answer. It'll take you some time to be able to get like good enough at trading to be able to master a good exit plan. A lot of people have their entry rules, but a massive majority of people do not have their exit rules. And it's kind of like you got to have both. You got to have both, or else you'll end up being married to your trade when you don't want to like have that hopium. Oh, maybe if I get in now, this could be the bull run could happen soon. You don't want to like stick to that ideology and then end up holding your trades too long until they end up becoming losing trades. But looking at Solana right now, we are building an ascending regression trend. So these are typically bearish because we are in what we're technically doing in the background is we're grabbing liquidity, but stacking below us. So these statistically, because of that behavior, are more likely to break to the downside. This down here being the target. But doesn't mean we won't get a bounce here, right? We could maintain this regression trend longer. But because of the pace of the buyers being consistent, this is an area where you would want to prepare for potential longs. Alongside with the previous value area high here, and previous range support. So let's see if we get the opposing change of character here. We could potentially prepare for a long. If we don't, if we end up breaking down, have access resistance, get a lower low, then we targeting down here. Solana is one of those ones where I kind of shot myself in the foot, where I stopped trusting it. When it was, I trust it now, but I stopped trusting it when it was around like $20, $16 for an opportunity to buy because it had so much of its liquidity on FTX when FTX pulled the rug that I'm like, I was very worried about this thing just getting destroyed. But luckily they got funding to recover from that. Okay. There's a lot of noise in this chart. I got to clean it up a bit because not all these value areas are helpful. Here we go. This one's helpful. Being at this previous demand zone here, right? Impulse move, base, impulse move. And now we fell down into it, mitigated pretty much the whole thing here, but we're still honoring it as a form of support. Let's see if we hold this area. Now Bitcoin's back at its value area high, guys. So here we could expect potential support. If we get that, like double bottom posture, right, a good pullback, or at least 2 candles, lower low, give us a key level for a potential reversal. Let's see if this acts as support. If we instead get acceptance into the value area with the break of structure, we could fall right back down to this previous point of control. But I believe this, yeah, hit his target already. Yeah. See if we get those continuations or not. All right, so now the quantum saying you have a long that opened at $2.63 and made additions to avoid being liquidated. Should I close the transaction? What are my mistakes? So you're talking about your liquidation price rather than your stop loss. So that's one mistake. You can't be trading without a stop loss. Like you can invest without a stop loss, like buy an asset. But if you're trading with leverage, like I recommend not. They don't. Yeah. So let's see where you are at first. Like $2.63 on TIA. Oh man, that's scary. I'm hoping that's a typo and you meant 163, but if you meant 263, you're adding to a losing position with leverage. So since TIA is in price discovery right now, it's the scariest time to be in a long and to be a losing long because you have no key levels to enact on for DCA trading. So like I used to be a martingale trader. like way when I first started trading is when I used to start trading without a stop loss. Like, right? I thought of stop losses like, oh, this is a scam. This is just made as used as a tool to take our money kind of thing. But it's not. I promise you, like stop losses are your best friend. They're the only way you're going to be able to scale in this space because now as a because you're martingale trading, your funds are now tied and trapped, right? Until you're in the profit zone again. And we don't know if you're going to be losing your entire capital or not if you got liquidated. So I would say your last straw, man, is if we lose this value area and we have it act as resistance and get the lower low, we don't know where it could fall down to without looking at the order books. We could keep on falling. We could fall really, really harshly like we did last time over here, or we could fall slowly like we did here. We have just step ladder our way down. But I would say just the primary stake was trading without a stop loss. Around 263, I could see reasoning for longs around here. I'm not sure when you jumped in. Probably in the last leg here. Maybe not reasoning there. But yeah. Yeah, man, I just be very cautious. I wouldn't keep adding to the losing position because you never know if you're just going to keep adding and adding and adding to an asset that's dying, right? Like Tia, I'm not saying it's dying for anyone who's a fan of it, but I am saying like it's constantly making lower lows, and this is how like zombie tokens are made, where it gets such low volume, low interest that they just eventually start being range bound forever because they don't have enough liquidity for traders. Just be very careful. I would definitely recommend not adding to your position anymore, and I would definitely recommend if you see this value area act as resistance with a break of structure continuation, then I would consider potentially like cutting your losses and just try to keep what you currently have. Not financial advice, of course, but I just don't want you losing everything you put into that trade. Oscar asking if 15-minute SFP confirms target should be local high, right? Not all. So 15-minute SFPs are pretty strong, but when you are looking at an SFP, let's say you took, oh, we had the benefit of hindsight here. Well, not really. Let's draw something really quick. If we're coming in and let's say there's like a wick down here and we were trying to get an SFP off that wick, you would look at the high of the range that was just created, which is normally like really small, like super small range. Once we get that liquidity grab, you watch the top of that range, and that's your primary target for an SFP. Like it's a very, very short, brief target, but the R&R is usually like a 1 to 3 or greater just to that. But if we get a change of character follow up, which is typically where your area of concern is, then that can tell you can stay in your SFP until the opposite side of the value area. So the barrier for SFPs is actually pretty darn local. I know a picture perfect version of this lesson. Let me a second here. Like there's one on the daily that I like to show as a lesson for that. So let's see here, for example, we have an SFP, right? We grab this liquidity with this wick and we close back inside the range. So this became a confirmation of an SFP. Your barrier concern will be right here, the local lows. You're watching here as your primary target. But if we break it for continuations, then you can use the value area data to generate a target, right? So at this time, let's like from here to here. Really? Okay. So your target was basically already hit at that time. But yeah, we could have continuations that could generate, you could watch like the other confluences to generate a target, like for example, the 200 after we break past, you gotta think of targets as your barriers, right? Whenever you're like jumping into a long or a short, you generate your targets and like what could halt the trade from continuing, right? So if you're entering a long down here, you'll be worried about this, right? So you look at this as a warning sign. If you get past this, where's your next barrier? You'd be worried about the POC. Get past this, what's your next barrier? You'd be worried about the liquidity and the value area high, right? It's about taking your trade in stages of barriers and just holding its hand only when we're at those barriers and trying to let it run when it's in between them, kind of thing. I hope that helps. But basically, yeah, SFPs, it's always your local, like very local high or range high that is your first target. But if you get acceptance to a value area, which is usually like shortly after an SFP, then you target the opposite side of that value area. We got to bounce off the value area high, and now it looks like we're getting acceptance into it. That's crazy. Just pressed undo. Well, that's kind of nice. So we can delete this. We don't need these trend lines anymore. We can see if there's buyers still waiting here, but what is that? 104.5. Let's pull up the order books. Just gonna hide that, sorry. Let's pull up the order books at 104.5. I want to see if there's buyers still waiting down there. Getting the crazy deja vu right now. I feel like I charted this like 50 times. Okay, we do have a little bit of a buy wall there. It's not very big. $150 Bitcoin. We have a little one risk prior to that too. 104.6. Another 150 Bitcoin. So 104.6 and right on the trend line here. So we have buyers. We see evidence of buyers still here from the order blocks. 104.6. There's 150 Bitcoin here. And we have 150 Bitcoin basically resting on this trend line. So there, we know there are buyers there. It's not crazy strong though. It's like 150 Bitcoin each. Only during times of low volume where I take 150 Bitcoin kind of seriously. But it is off a trend line and it is off an order block, those two areas. So people who don't even look at the order books will look at these areas as a point of interest for potential longs. I wouldn't be longing near a POC, but I should mark it. POC, a little miniature demand zone, order block. Let's see if we bounce off that, hit our head off the value area high, and then come down. Bart Simpson. Oh, we were talking about that the other day. It's not a perfect one. When you have these like, it's kind of like famous in the crypto industry. Like anyone who's been trading at least longer than a year will kind of know. Sometimes there's structures that look like, we're basically talking about triple tops, where you get like these triple top patterns, and then we have a harsh drop down. We call it the Bart Simpson. Was that really you sending me a message this morning? Just got home and only got messages from bots. I didn't. I'll respond to your messages, but I won't go out and. Oh, Zach, you're talking to Zach. Yeah. So yeah, just anyone. Yeah, make sure you triple confirm usernames, guys. When it comes to Discord, there's a lot of people impersonating others, especially when they're asking for money. It's just nuts. Kyle, you'll tell us when you go into a short or long. Seems like we're testing an area. Yeah, I'll let you guys know if I jump into a trade for sure. But I'm not going to be trading where we are right now. I'm a trader when we're at a value area low for longs or value area high for shorts. But since we're getting acceptance into the value area, It depends. It's a very situational kind of thing. If you're going to see me jumping into a continuation after acceptance to the value area, I don't like it nearly as much as after we've settled into the value area. I like using, so if I was in a short up here, how I'd be using this value area as a tool is to tell me when I can stay into my trade and how I can evolve my target. Because if you're jumping in a short up here, you're going to be targeting this value area high as your primary concern. But if we get acceptance into it, like we're trying to hope for here, then you know that you can extend your target from here to here while being mindful of the barriers along the way, like the POC or this little demand zone or this uptrending momentum. All right, now the whole pump that just happened has officially been undone. Crazy. It's nuts. But we scooped up all this liquidity. All the liquidity that was here is now gone. We have it resting up here now. Here and here. So if you're jumping into longs, that would be your new key area of interest. If we get in down here, we just got to confirm long first because we could just keep on going down, guys. We just broke through that order block like it wasn't even there, that POC like it wasn't even there. And now we melted through that, the buy wall that was alongside this trend line. I'm just going to delete that now. It's no longer helping us. So now it's just a matter of what we do down here. And we have a lot of fair value gaps. So if we get a return back up, it could be another fast-paced move. Because what happens when these fair value gaps are created, what's happening in the background is like an inefficiency in the order books. So the order books could be clear unless we see sellers come back, which takes a little bit of time. The order books could be clear to help bring us get us another move back up fast, which is likely the same reason why we fell down as quickly as we went up, right? Order books got cleared out. And the only buyers that were here were potentially the spot traders, right? You also got to remember the spot traders out there where they're what they do to take profits, right? If they're accumulating the assets, then they would be rebuying. They'd be selling after a position of strength, and they'll be rebuying here, which induces a support at targets. How do you read the buy and sell wall, and what is the amount of Bitcoin do you want to consider as resistance and support? I have a big video on that, but I could go over that quickly. We have this is the order books that I like to use because it consolidates data from multiple exchanges like OKX, BitMEX, Binance, Bybit. And I can't zoom in on this, unfortunately, but you can kind of see it where my mouse is, where that little green ball is. Whenever you see little cliffs in the order books, that tells you there's confidence of support in that area, or there's just buyers waiting there, a large amount of buyers waiting there. So whenever you see those little cliffs, it gives you signs of confidence. So you use this in confluence with a value area low data, order blocks, trend lines, in confluence with anything, right? And it's telling you that there are traders agreeing with you in that area. And price cannot go lower than this buy wall, for example, until it's filled. Not possible. We have to mitigate the whole buy wall first before we can go down. So same thing with sell walls. We can't go above a sell wall until it's filled. Now, what I consider a strong buy wall is relative to the volume. But if you want like a blanket statement where you can be like, if you want to know like how much Bitcoin should I worry about, like 300 Bitcoin normally creates resistance, right? But during very, very low volume, like 150 Bitcoin can do it too. During high volume, though, we can melt right through it. But 300 Bitcoin normally at least induces a bounce, right? Now, 500 Bitcoin usually gives us about 2 taps. 1,000 Bitcoin is enough to scare traders for undercuts. So if you see undercuts being developed, it usually creates downtrending and uptrending support. So if you see uptrending support, it usually starts from a big buy wall and then people undercutting that buy wall, right? That's what creates uptrending and downtrending trend lines. Same thing here if we have a giant sell wall. I think the biggest wall I've ever seen was 3,000 Bitcoin. I think that's the biggest I've ever seen. I'm trying to remember, but we had one up here when we were at 12,000. Let's zoom in on the lower time frame so you can see a little more clearly. But one thing that could warn you to tell you to look at the order books, not that one, is there's some types of candle behavior that if you get it, you can start looking at the order books to see if there's a sell wall. So you see flat level of resistance like this. You should immediately look at the order books and see if there's a giant sell wall because it could help you in protecting your capital in shorts too. So if there's a sell wall here, and let's say we got like a change of character and you want to jump in on a short, you can then use that sell wall as a guide or a guardian for your capital too. Like put your stop loss right behind it because then you know that like that 3,000 Bitcoin would need to be sold first before your stop loss can get hit. Unless you have a really crappy exchange with a bad price aggregator, because sometimes they'll go higher than other exchanges or poor liquidity. But yeah, order books can help you with a lot of stuff. Double click. There we go. I am zoomed out too far. There we go. But yeah, I have a whole free lesson on YouTube on order books too. So if you're struggling with that, you can look at that. I even put like a list that you can copy and paste in the description of all the walls that I would be concerned about. And what channel do you post your trades? I'm in both Fanova and InvestiShare. So you just see they're paid groups though. So here you'll find my signals. Like yesterday's trade, for example, with YouTube. If I jump in on YouTube, I'll give you guys updates on what I'm doing with the trade here too. Stop loss adjustment, for example. Then we had our target hit. But what my signals look like, they like this. I try to be pretty straightforward, telling you the entry condition, what I'm waiting for, candle to close off a certain level, stop loss adjustion, target, stuff like that. I try to give notice, as much notice as I can too on the signals, but sometimes if it's an SFP, I'm like telling people I'm basically jumping in. Long-term bears would think this is over. I would say, just so if anyone's bearish, like super bearish or scared, this chart will keep you grounded. This thing is called the top perfectly every single cycle. And I'm not saying it'll call the top perfectly this time, but if we do get overheated, we are definitely coming down. So like, if we get the daily change of character up here, then it's like game over. We're going into a bear market. And based on the data of this and alongside with all the other on-chain rules that I follow, this is telling us that we're only halfway through this bull market. So if we were to go straight up with one candle, one giant green candle today, we would be exhausted around $160,000 right now, between 150, 160,000. But we're not going to go straight up, right? We never do, at least not this cycle. We go range bound and we create resets. So if we keep creating these really healthy resets, by the way, super healthy resets, our target for the bull market will keep getting extended. This chart will save you from jumping in at the top. So like here, I'll put the chart link there. This is a free tool to use too. And I have an entire course on calling the absolute top and calling the absolute bottom. well, not course, like a whole section inside the course. Sorry. And it's pretty straightforward. And if that's the only thing you take away from the course, that will turn you into like an advanced investor that know how to call the tops and bottoms for crypto. The Bitcoin calls also helps us identify when the seasons are going to start, because the seasons start when we're up in these overheated zones for our altcoins. All right, we're now down at the previous point of control. If we lose this, then holy crap, chill out. All right, guys, I got to go. I got a coaching call that starts in literally 60 seconds. But yeah, here I'll be preparing for potential longs. If not, it'll be down here at the 50-day EMA. I will give you guys a signal if I jump in. I'll let you guys know when we have the structure and what kind of key level we're going to watch for our longs. But yeah, good luck on your trades, guys. I hope you have an amazing weekend. It's Friday. Try your best not to trade in the weekend. The market makers aren't trading, so you don't have to, right? Try to take a break. It's a good time to study if you're at the charts already, right? All right, guys. You have a great day. Thanks for watching. Subscribe, share to your friends, and I'll talk to you on Monday. See you guys.